Good afternoon to all of you. Today in this class, we will learn about the last part of cash flow statement, that is how to prepare cash flow statement. Because in my previous class of cash flow statement, we have discussed about funds from operation. Thereafter we prepared cash from operation. Now the last part, that how we incorporate all the items of fund from operation or cash from operation and prepare cash flow statement. Very easy. Now 3/4 work we have already completed. Now 1/4 work is left. So as you know well, again, cash flow statement we prepare to know the changes in cash balance. Cash flow statement we prepare cash from operation. To prepare cash from operation, first of all we prepare fund from operation, and thereafter we will incorporate all the items of schedule of changes in working capital, that is current assets and current liabilities, by which the cash will increase, that will add in fund from operation, or the elements due to which the cash will decrease, that I will deduct here in cash from operation. That already we have discussed. So now in this class we are not going to discuss again for this. If you want, you just click the lecture which I have already uploaded on Facebook and YouTube, and see, this finance is for practice. As much as you listen, you will become more confident. In one go you will not understand anything. But if you listen at least 5 times the lectures which I have delivered, and if you listen carefully, I am very much sure that you will understand one-to-one aspect of fund flow or cash flow statement. And even then, if you do not understand, you just write in the comment box that please repeat this part, because this part is not understandable to me. Simple. I like it. I will become more happy, because my ultimate mission target is that my lecture should be understandable to each and every students of the world easily. They do not beg in front of the teachers that I do not understand. You should become more confident. And everything is on recorded, so there is no problem. Just you click and listen, just like as if you are listening the movie, watching the movie, just you watch. Okay, so in cash flow statement, there are again two sides. One is sources and other one is application. Sources, that is the resource from where you will get the cash. That is, you can say where got cash. From which resources you got the cash. Why you want to watch the resources? Because until unless I will get cash, I cannot utilize. The business will not run. So that to run the business, the organization must have cash. So one side is from where you got the cash, that is source. Other end is where you will utilize the cash, where gone cash. The cash is gone for the purchase of fixed assets, to pay the interest, to pay the dividend, to pay the tax. Am I right? Very easy. Now, in cash flow statement, because we want to calculate the changes in cash balance. So the first element through which we want to start this cash flow statement is opening cash balance. Opening cash balance is the first head, first element which one should consider. And this, from where you will get and how you prepare this cash balance? With the help of 2 years balance sheet. So, suppose this is your balance sheet. This is the figure of 2019 and 20. Suppose this is fixed assets. This is current assets. This is cash. Cash is 10 and 30. So which amount? Because you have to prepare this cash flow statement with the help of this balance sheet. And this is your cash in your balance sheet, 10 and 30. So which amount you want to consider here, opening cash balance? 30 or 10? Obviously 10. Because this is your opening cash balance, this is the closing cash balance. This is the closing cash balance of 2019. That will become the opening cash balance of 2020. And this is the closing cash balance of 2020. So this is your opening cash balance. So this opening cash balance you write from here to is that clear? Now, again there are two sources like fund flow statement, internal and external. Internal source, the source which you are generating to get cash so that you can run the business. So which are the sources? You have two sources. External, long term. That is called long-term funds. So long-term fund, there are two sources. One is owner's capital, owner's security, and other one is debt security, debt capital. Owner's capital, owner's security, you have two types. That is equity share capital, that is common stock, and preferential capital, that is preferred stock. And debt capital, debt security, there are three. That is bond issued by the government, public sector, debenture issued by corporate sector, private sector, and bank which will give you loan, long-term loan. So now you have to see the impact of that long-term fund which becomes source. Now you tell, अब आप बताओ, लॉन्ग टर्म फंड में ऐसा क्या चेंजेस आएगा, which type of changes will give you cash? There are all two changes, increase or decrease. So what do you think? Increase in long term fund will increase cash, increase in long term will become source, or decrease in long term fund will become source? Decrease in long term fund will become source, or increase in long term? Just you write this answer in your comment box so that I should know that how many of you understand. Increase in long term fund becomes source. Increase in long term fund means this is your long term fund. That is equity share capital, preference share capital, bond. Increase in equity share capital, suppose 10 and 8. Preference share capital 10 and 13. Now you tell me, in equity share capital, which type of changes you observe in your balance sheet in the case of equity share capital? Equity share capital is increasing or decreasing? Increasing. Raise your hand. Increase. Equity share capital is increasing or decreasing? Write the answer in your comment box in Facebook or YouTube. Equity share capital is decreasing, 10 to 8. So, if the equity share capital will decrease, that is, if the long-term fund will decrease, what do you think? It will become source or application? When decrease means you have already paid to whom? Equity shareholder. What? The money which he has spent. How much? 2 rupees. So, because of that reason, because we have paid, so the equity share capital amount decreases from 10 to 8. So do you think, should you write here decrease in equity share capital? No. Do you write increase in equity share capital? No. When the long-term fund increase, in the case of preferential capital 10 to 13, increasing. So, what do you think? This is 10 to 8 become source or application? Because you are paying, decreasing, so it becomes application. So, it will be on this side. That is decrease in long-term fund. That is called redemption. Redemption means decreasing, means you are paying. Decreasing means redemption. So redemption in long-term fund, that is how much? Redemption in long-term fund is 2 rupees. What about preferential capital? 10 to 13. Increasing. Increasing means what? Increasing means you have issued more shares in the market. How much? 3 rupees. Why? Because you are in need of fund. So we have issued the shares of 3 rupees, we will get 3 rupees from the investor. So it becomes source. So in this case, don't write increase, that is issue of shares, debentures, whatever. That is how much? Suppose 3 rupees. Is that clear? So you have the idea about the increase in long-term fund and decrease in long-term fund. Increase in long-term fund will become source and decrease in long-term fund will become application. Increase in long-term fund will give you cash, decrease in long-term you will utilize cash. Then only you redeem, and if you issue, then it will become your source. In the pocket, 2 rupees or 3 rupees came. Clear? So you have seen the long-term fund, impact of long-term fund on cash, whether it becomes source or application. Now you see the fixed assets. Fixed assets, suppose land and building, 8 to 11, and plant and machinery, suppose 12 to 8. Now you tell me, land and building is increasing from 8 to 11. What does it mean? It becomes source or application? Write the answer in the comment box. Land and building increasing from 8 to 11. It means you have 8 houses, each of 1 rupees. Now you have 11 houses, each of 1 rupees. It means what? 3 houses you purchased. Purchase means what? You have utilized the cash. You have applied the cash. So your cash has gone for the purchase of fixed assets, for purchase of land and building. So which side you want to write? On the application side. Which impact? Decrease or increase? Increase. Increase of what? Fixed assets. Okay? So if the there is increase in fixed assets, it will be an application. An increase means purchase. So, increase in fixed assets means purchases of fixed assets. Purchases of fixed assets means purchases of land and building. Land and building is how much? 3 rupees. Now, plant and machinery, 12 to 8. Earlier you have plant of 12 rupees, each of 1 rupees plant. Each of 1 rupees, 12 plant, 12 rupees. Now how much plant you have? 8 plant. Where the 4 plant gone? You sold. What you will get? Cash. So which side you should write here this decrease of plant and machinery? On application or source side? Source side. Why? Because in this situation the fixed assets, amount of fixed assets is decreasing, and fixed assets decreasing means there is sale of fixed assets, and sale of fixed assets means it becomes source because cash comes in. You got the cash by sale of fixed assets, by sale of plant and machinery. Is that clear? So, decrease in fixed assets, that is sale of fixed assets. Decrease in fixed assets means sale of fixed assets. So what? Sale of plant and machinery. How much? Suppose here is 4. Is that clear? So what? You have seen 10 rupees of opening cash balance. You have seen increase in long-term fund, decrease in long-term fund. You have seen increase in fixed assets and decrease in fixed assets. So all you have seen, decreasing long-term fund, reversed, increasing long-term fund. You have seen increasing long-term fund and decrease in fixed assets. So increasing long-term fund and decrease in fixed assets. Decrease in long-term fund and increase in fixed assets. So both increase in fixed assets, decrease in fixed assets, increasing long-term fund, decreasing long-term fund. All you have seen. And current assets and current liabilities you have already considered. You have already considered in fund from operation. In fund from operation you have already included that change, increase or decrease in current assets and current liabilities. Is that clear? So now one point remains, that is what? That is the balancing figure of cash flow statement. What is the balancing figure of cash flow statement? Balancing figure of cash flow statement is, that is closing cash balance. So suppose this one is, now I should make a balance, 10, 13, 470, 336. Now I want to make a change here. 6, this is 17, 6, 5, 12. This I want to write 12. Now you see, because this is 10, 3, 13, 4, 17. This side is 17. This side, how much in your pocket? 17 rupees came. You have utilized 3 rupees and 2 rupees and 3 rupees, 5 rupees. How much remains in your pocket? 12 rupees. So how much is your closing cash balance in balance sheet? 12 rupees. So when this amount matched with this 12 rupees, it means your cash flow statement is correct. So if the amount of which you are calculating cash flow statement and the amount here, suppose it is 30 rupees, it means you have committed some mistake at the time of preparing maybe cash from operation, maybe fund from operation. It means your answer is wrong. But if suppose this is not 13, if this is 12, it means your solution is right, correct. You have answered correct. Is that clear? समझ में आया? So this is all about your cash flow statement. Now you watch this lecture in Facebook or YouTube as much time as you can. When you feel relaxed, at that moment of time you just listen. And if you feel any problem, immediately you write a comment, and within 24 hours I will satisfy you your problem. Okay? Thank you. So analysis and interpretation of financial statement, that is fund flow and cash flow, I have already completed. So now in the next class I will discuss ratio analysis. Very interesting chapter. Thank you very much.